Thank you for joining FTMIG as we host Dr. Dave Webb, President, CEO, and Director of 60 North Gold Mining Limited. Dr. Webb has a Ph.D. in geology and brings over 40 years of experience in exploration, resource estimation and development, mining operations, and public company management to the table. Dr. Webb completed his Master's of Science and Ph.D. in Yellowknife, where he has also discovered 4 gold deposits and developed the largest gold resource reported in Yellowknife in the last 50 years. In this interview you're about to watch, you'll gain a clear understanding of not only Dr. Webb's extensive qualifications, but also a detailed history and plans for the future. We hope you enjoy, and please be sure to like and follow us on all our social media platforms for more great content.
So joining me now is Dr. Webb. Dr. Webb, how are you?
I'm great. Thanks. Nice to be here, Carl.
And you're in Vancouver, right?
It is sunny Vancouver today.
All right, so I'll do the obvious small talk question. What's the weather like there today?
Today is the first day of sunshine after a week of rain.
Are the temperatures normal? Yeah. Are the temperatures below 20 or above 20?
We rarely get above 20 until late June. So we're in our typical cool off period where we try and dry off here.
All right. Well, we've had about a week of 20-degree weather now in Toronto, or just outside Toronto, so I'm soaking it all in. But I was excited for this interview because I'm personally invested in gold and silver. I love the mining sector, especially where we are today, for many reasons. And I was looking over the company, and I thought this is a really interesting exploration company that I want to interview. But first, Dr. Webb, why should an investor ultimately put their trust and their money in your hands? What's your background? What accomplishments have you had in your career?
I've been focused on gold for quite a long time. I started in the business very early on in my teens, initially as a diamond driller, but I saw that everyone around me running the projects were PhDs. So that was my mandate in my life, is to go out and get my PhD so I can too run projects. I did my master's thesis up in Yellowknife on the Con mine, past producing gold mine now, 6 million ounces of gold. And then I did a PhD on the whole Yellowknife belt because it's produced about 15 million ounces of gold at a half-ounce grade. And I thought this was extraordinary.
Just sticking with sort of you here for a second, when it comes to being positioned in this public vehicle, do you take a salary or do you own shares in the company?
Yes and yes. And everyone in the company gets the same base salary, and that's never paid. So when we do financings, we generally roll our minimal $5,000 a month salary into a share issuance, and we take stock in the company at that time. Now, I'm in a position where I could go out and buy shares in the company, which I've also done, and by lending assets to the company, I ended up owning shares as well. So myself personally, I control a little over 25% of the issued stock in the company.
So your bias is owning shares in the company, which from an investor standpoint, that's what I like to see, because obviously if the stock price goes up, we all win, including yourself. When it comes to just some capital markets questions for you before we get into the property, how much of the float do insiders own?
I think the insiders now are comfortably over 35%. But some of our largest shareholders are also, we're in communication with all the time, confirming plans, confirming direction of the company. And when we roll in people that generally will vote on our side and come along with us, we're probably over half the company.
Okay. And of those shares, we can round it up here, but how much of those are in escrow, if any?
Most of my shares are in an escrow release. So I received a 25% issuance from the company by transferring 100% interest of the mining property into 60 North's hands. Now that's held in a company. So that company is 50% me and 50% our former mine manager, Jerry Hess. So I don't personally own that 25%. About 2.5 million of those shares of that is released in free trading, and you'll see how many I've traded or sold over the last 5 years. I've not sold a single share.
Okay, and when it comes to these assets getting into this public vehicle, was it done via RTO? Was it a new issue?
No, the original deal. I owned the property and I was trying to finance it privately. I thought having a little gold producer where you can produce maybe 30,000 ounces of gold a year, perhaps building that to 60,000 ounces of gold per year, that would be a great company for me and a bunch of my friends to run. And the feedback I had from my well-to-do friends generally came back to, yeah, but what's the exit strategy? How do I get out of a private company? So we cut a deal with 60 North Gold Mining, which was purpose-built. It was formed for the sole purpose to acquire my interest or the entire mine operating property. And we negotiated a deal back in 2016, I believe. So actually, it was a little bit earlier than that. It was done in a numbered company, then it ended up being into 60 North. So that deal was cut about 6 years ago. There were a few amendments. Expenditures didn't quite meet the time frame, but tough times. I can accept that, and that's not a problem. I'll work with the company. We'll make this go. And lastly, the company was, within a hair breadth of meeting the minimum expenditure requirement. And I said, that's good enough for me. Let's remove the risk that some shareholders are asking us, what if Dave Webb yanks the property from 60 North? No, it's 60 North. Let's run with it. This is my vehicle now. This is my way of making money. If 60 North doesn't make money, then Dave Webb doesn't make money.
Appreciate you putting your interest with mine as an investor. Okay, so now, what's the valuation of the company fully diluted right now? Do you know off the top of your head?
On the issued capital, if we're trading at a nickel, we're worth about $10 million. We have another, I believe it's about 90 million shares in options, warrants, etc. So that would add another, call it another 100 million, another $5 million. So fully diluted, everything out there, $15 million.
Okay, and what was the last valuation of the last raise?
The last raise, I'd have to defer to Ron here because he's the number cruncher that keeps track of these all the time. Ron's on mute.
6.5 cents.
6.5 cents. Okay, so you're currently trading under the last raise. Is that accurate to say when you look at valuations?
Us and most of our friends, yes. The market has been down in the last 6 months.
Okay, so that could be an opportunity for new investors to come in under your strike price. Is that accurate to say?
Absolutely. We're on sale.
Okay.
This week only.
That's all right. All right. Enough of the capital markets questions. I can go on with those for days. Let's get into the property here. I think let's talk about the history right off the bat. The history.
Okay. It's got a long history, so I'll compress that into like 3 or 4 sentences. Yellowknife, as a gold belt, was discovered in the mid-1930s with an exciting outcrop in Yellowknife, which didn't exist at the time. The Con mine was founded very quickly after that, as was the Negus and Rikon mines. So in the 1930s, 36, Cominco started digging up gold on the Con mine property. And in 1937, the Mon Property was discovered as part of a more regional expansion. Cominco wanted to expand their land position. The Mon Property at the time, it was that there was this high-grade quartz vein on the side of the hill. You could see it flying by, so it attracted attention. and it was lousy with gold. It was many ounces of gold over many feet of width, and they thought they had it made. So within a year, having staked it, Cominco sank a shaft. No drilling done. All they did was trench to confirm that the vein is on average just under 2 meters wide. On average, it's about 100 grams of gold per ton. So let's sink a shaft on it and start mining it or developing it. So they sunk the shaft and couldn't find the down dip extension of the vein. They were snookered. Fast forward, first of all, about 10 years, and the discovery mine was found 45 kilometers to the north. And it was this high-grade quartz vein in the same host rock, same alteration, 20, 30, 40 grams per ton on average, up to hundreds of grams of gold per ton. And they started mining as well in 1949. And they started mining at 100 tons a day. Cominco revisited their details and said, my God, we have one of these things. Let's start drilling. They found the down dip extension. But as they drilled it off, it got skinnier and skinnier and lower grade. And they said, well, it might be there, but there's not enough for us to really chase. So it sat until the 1980s. A number of companies had drilled into it and couldn't figure it out. Came in the 1980s. I cut a deal with Cominco to buy the property from them. Drilled because I thought that the vein didn't go straight down. It actually was sloped and it was offset somewhat. So we drilled, found that it was offset, started mining that, and we extracted 2,300 tons at 26 grams of gold per ton, and that started the mining on the property. So we continued to develop on that, eventually extracting 15,000 tons, recovering an estimated 15,000 ounces of gold, which we processed on the property with our own mill.
So what made you believe that it actually sloped? How did you get to that conclusion yourself?
Dave Webb was doing a Ph.D. on structural geology, and I was measuring the little elongated mineral grains in the wall rock, and that not everything is vertical, not everything's straight up and down. Sometimes there is a slope to it, and if there was to be a slope, if all the minerals in the wall rock seem to be sloping to the south, perhaps the ore body plunged to the south. So that's all we did, is chase it that way.
Did anyone that had the property prior to reach out to you, or did you have conversations about, your new thought process and how it became successful?
It's not really rocket science. It's very basic geology that we use to find that. But by the same token, in my past, I acquired the old Discovery Mine, which, when it finished from 1949 to 1969, had produced 1 million ounces of gold from 1 million tons of ore. I acquired that with a partner, and we went on and looked and ended up developing almost 1.5 million ounces of gold in another kind of mineral deposit that people hadn't really recognized. I took that, we went to another property, Clan Lake, which actually adjoins the Mon Property. I was drilling that in the 90s with a partner, and we were looking for high grade, but it wasn't until early 2000, in reviewing my notes, that I realized we were drilling into a low grade deposit. We just didn't recognize it at the time. We revisited the core, resampled, and turned that into, it's now hosted, I believe it's about 250,000 ounces of gold of open pittable resource. So there's a lot of opportunities in Yellowknife just by applying good science.
Mm-hmm. So you really don't have to overthink it from a geologist standpoint.
Well,
okay, so that's sort of the past and the history. What about where we are now and the blue sky potential?
Yeah, during operations in the 90s, I got to know Jerry Hess and some of the team that he worked with. Later on, I engaged his company to do some work to drive 1,000 meters of ramp for me on a different company and different property. And he did an outstanding job at almost half the cost of the the next lowest contractor bid that we had on the property. So I knew him to be a very efficient operator. So I looked at that and I said, maybe on the Mon property, rather than diamond drilling to establish 50,000, 100,000, 250,000 ounces of gold resource at a cost, maybe we should just reestablish the mining operation and start extracting more of that rock. And we went through the costs, and unfortunately, because of 43-101, we can't report that publicly without a 43-101 report, a feasibility study, which we're not going to do. We know that we can go in and we can mine that, and we know it's cheaper than diamond drilling and going through the resource issues.
Okay. So what strategic investors have you been able to bring in with sort of the history and this blue sky potential?
Generally, the strategic investors we have are all private people that would rather keep their names out of the press. So they're high net worth individuals that step in and just believe in, you know what, the whole concept of making a profit by mining is not a bad one. The idea of, on one hand, you can diamond drill at a cost of about $60,000 per drill hole. You can establish a resource, and currently it's costing anywhere from $50 to $150 to add an ounce into a resource category. We can avoid the pre-feasibility study or the preliminary assessment, the pre-feasibility study, and the feasibility study, all of which cost increasingly large sums of money to establish whether you may have an economic deposit or not. Well, why in the world would you do that for a 20,000 or 200,000 ounce deposit? I mean, that just doesn't make sense in this day and age, and no one really cares. But if I could mine 200,000 ounces of gold and do that at maybe $500 an ounce or $1,000 an ounce, that might catch the attention of some people. Now, if we're looking at mining, we're permitted to mine at 100 tons a day. The past production history on the property is 1 ounce per ton. So that could represent 100 ounces of gold per day, which could represent $250,000 Canadian per day, rounded up a little bit. We're looking at this amount of money coming in, and we know mining costs quite well. So we're quite happy with that proposition.
Moving back to the property, though, let's talk about the location and more so the access of the property.
Yeah, the Mon property benefits from being close enough to Yellowknife that we can use our cell phones if we want to call for a flight, a helicopter, additional workers, supplies, whatever. And that's tremendous. You don't have to pull out the satellite phone to do that sort of thing. We are on the major transportation corridor, ice road or winter road transportation corridor up to the north end of the Yellowknife belt. So it's a well-established route, and ice roads are quite common. So we can do that with quite assured that it's easy to do. Halfway between us and the city of Yellowknife, which is a major transportation hub and a major supply hub, is the Bluefish hydroelectric power plant. So this past year, our winter road was initially installed by the Power Corporation. We didn't have to do an entire 45-kilometer route. So communications, transportation, and the fact that Yellowknife is a well-established, centuries-old belt, and I mean centuries with by infrastructure being developed in it of some sort, it's a great place to look for gold.
So we you've explained why you're going to go straight to mining and not bother drilling at this point, but what could we expect to hear from the company over the next 3 to 6, 12 months?
Well, like most juniors, we're constantly seeking funds. So never be surprised to see a junior saying they're raising money. I mean, that's pretty common. Don't expect to see it happen too much when we're at the lowest share price. We tend to like to sell our stock at a higher price. That said, with funds in hand, you'll see us mobilizing crew to the property. We have all the equipment, the explosives, the fuel, the camp, Everything's there. We just have to move the people in, and we'll start mining. Last year, we did about 130 meters of ramp development. In another 70 meters, we will be intercepting, we'll be well below the old stopes that produced at 30 grams of gold per ton. We'll be intercepting a drill hole that hit 15.29 grams of gold per ton over 1.6 meters. That was one of the drill holes that we put down in 2016. We'll be 10 meters below a historic drill hole, 61 grams of gold per ton over 1.2 meters. And then we'll drive the ramp a little bit farther around to give us a little bit more tonnage that we can develop. We'll be below 47 grams of gold per 3 meters, 25 grams of gold per ton over 1.7 meters, 19.8 grams over 1.5 meters. So it's really just get underneath this good high-grade material, and then you mine. You always mine from the bottom up. So we'll get down 20 meters below the old stopes, and then we can start mining that material up. So within 3 months, crews on the property. Within 6 months, the vein will be intercepted, and this grade material represented by these drill holes will be developed and some of it extracted. And then this time next year, the mill will be sitting on the property. That's the plan. And it will take us about 30 days to get it tuned up, and gold bars will start getting poured.
Do you have any comments, and it's okay if you don't, on the macros when it comes to gold and the price of gold? Because obviously you're losing some leverage right now out in the market. But I still think a long-term view of gold is pretty bullish from my own perspective. What are your thoughts, if you have any?
I tend to be a contrarian. Although I've been involved in the gold business for over 40 years, I never actually went out and purchased a gold bar until gold went below $300 an ounce US. I thought, this is ridiculous. Who can possibly make money with gold at such low prices? So if nobody can make money mining it, then I'm going to buy up what I can. So I am a contrarian in that thought. So if nobody's buying it, either it's never going to be needed again or wanted again, or perhaps it's a good time to step in and buy some. So long term, I believe the price of gold will sort of go contrary to the US dollar, which, normally when people ask me about gold, I just say, well, what do you think of the dollar? Is it going to become more valuable over the next 6 months, 12 months, 10 years, or will it lose some of its value? And if you just look at the long-term charts, you can say, I'm going to be guaranteed it will lose value long-term. Okay, so the corollary is gold, guaranteed it will gain value in US dollar terms long-term.
I've done a lot of interviews, Mr. Webb, over the last 5 years, and I've never heard someone put it that way, but that's very accurate. Absolutely agree with you on that, on your perspective.
It's not the first time I've heard the question, and I've read all kinds of papers on it and followed it. I disagree with a lot of it, but one of my best introductions to gold was a book by I believe it may have been a Polish mathematician that said, we've got it all wrong in the world. We should price everything in gold because it's the only yardstick that is really difficult to change. All dollars are yardsticks that can change just by fiat, declaration of a central bank. So your house, how many ounces of gold did it cost? Well, people are looking back and saying, oh, my parents had it so good. They could buy their house for $50,000 and now it's worth $500,000. And I can sit back and say, no, what they did is they put in 150 ounces of gold. And you know what? It's still worth 150 ounces of gold. It's a yardstick that doesn't change.
Yep, I agree.
What we are doing is not anything that hasn't been done before. So in 1936, when Cominco started mining the Con mine, they put in a 100 ton per day mill. In 1936, their total reserve book was 0 ounces. In 1937, their reserve book was 0 ounces, but they had produced that year 47,000 ounces. In 38 was the first year that they published a reserve. And it went on to produce 6 million ounces of gold. And at its peak, it was about 120,000 ounces of gold a year. So it started small and grew. The giant mine, which is better known than the Con mine because it's more of a notorious mine for various reasons. It started production in 1944, I believe, at 235 tons a day for the mill, but they never actually made at 235 tons a day until their second year of production. And then they went on to produce almost 200,000 ounces of gold per year at its peak. The Discovery Mine, the mine that looks most like us, started production in 1949 at 100 tons a day. And it slowly ramped up to 235 tons a day at its peak. But because of the high grade, they were touching on almost 100,000 ounces of gold per year at their peak production. I think the Con mine, Giant mine, Discovery mine, that's all part of the belt, and that should be telling us something. And being students of history, we should realize if we start our mine at 100 tons a day, can we grow it? Can we build it up? And what is the potential? How deep can we go? The Con mine eventually went down 1,900 meters. The Discovery mine went down 1,200 meters. The Mon mine, its first years of production, it's down 15 meters. We're hoping to double that or more. So, it's really baby steps, but this is the way the belt has been developed, and we're really treating it the way people should do it, logically.
Thanks for that, Dr. Webb. So, Dr. Webb, can you grow your 100-ton-a-day profile?
Yes, we can. All of this is predicated on the regulatory authorities approving each incremental increase in production. And virtually everything we do is covered by regulations in a manner that anyone who's tried to develop a property in the Toronto area can realize. They want to know what color you might be painting your house, or what kind of wood is that, and what are you doing with your scrap wood? You're not burning it, for goodness sake, are you?
I'm laughing because I'm going through similar stuff right now, like with different, with the region and the municipality and all that. And it's just such a funny, onion of red tape from the government. It's just horrible to go through. But yes, that is exactly what it would be like.
Welcome to my world in the mining regulatory boards.
Especially when you're public, right? It's part of why I said, it would have been nice if your friends and would have just saw this for the nugget that it is of revenue and money and just kept it private. But Dr. Webb, I have to ask you this question, since, obviously we're coming out of the pandemic and COVID, hopefully, fingers crossed. But one thing we learned about it is all of these supply chain issues that we have. Is this affecting you, your staff on site? If so, how are you handling it?
Yes, there's many ways it's affecting us. Supplies do need longer lead time. Last year, it took us 6 weeks to get a fan belt, a simple fan belt that you'd run down to Canadian Tire to get. But we do have on the property over 140,000 liters of diesel fuel. We have over 20 tons of explosives, all the steel, all the lumber, all the supplies that we need to proceed. Our next issue is going to be getting the gray-haired, experienced people that we want on the property. We are not a training program. We are not taking newbies in and trying to teach them how to mine. That will happen when we have some latitude of time and energy. Right now, our miners have over 20 years experience at a minimum, and these fellows tend to follow the leader. So we have two great leaders in Jerry Hess and Rod McKay. Rod McKay is our current mine manager. He's excellent at it, and he brings with him a team that can do what we need to do under incredibly trying circumstances. Our job is just to make those circumstances as easy as possible.
Dr. Webb, what price did you buy all that diesel at?
Yeah, unfortunately, there was a little tiff going on the other side of the globe. We had lined it up at $1.40 a liter, but we ended up having to pay $2 a liter for it, and we were lucky to get it at that.
Well, that's 46 cents cheaper than what I filled up my two diesel jerry cans today to fill up my Kubota equipment. But all right, thanks for the update on the supply chains and how you're kind of going about things there. Appreciate that.
You're welcome. It's an evolving story, and I can't wait until we see the shiny bars at the end. We did pour gold bars on the site back in the 90s when we were there, and it was always a good old group of boys. Then it was done privately, so we're sitting back, drinking our little cans of pop, watching the furnace go and pouring these little gold bars. It was fun.
I'm sure you've got lots of stories from the 90s, and I would absolutely love to follow up with you gentlemen and the company and where it's going in 3, 6, 12 months looking out. I'm sure this is a story that will grow. I'm going to wrap up the interview right now. So thank you very much for answering my questions today, and I look forward to catching up with you down the road.
Thank you, Carl. Next time.